Hello, ladies and gentlemen. Welcome to our financial show, Modern Financing, Modern Investments. And I would like to introduce to you Peter Bennett, who is a contributor to the show, big time, I must say. And we would like to have a talk about today's state of economy, stock market, and what's ahead of us. Peter, what's your take? What's happening in the last few days?
Well, obviously, there's tremendous volatility, and the market is scared of several things, which I think it's starting to realize that it shouldn't have been scared in the first place. But it dropped a lot, and there were some opportunities, and there still are. First of all, they were afraid of the Delta variant of the coronavirus. But the thing is, in the U.S., about 60% of the population is vaccinated. The hospitalization rate in the U.S. is 20% of what it was at its height. The world is catching up, country by country. They're all getting the vaccines, they're giving it. And the most important thing is that, except for some political parties and some states exaggerating it, they're over exaggerating it. So they're scaring the market. But the fact is, people who have had the vaccine have very mild symptoms. And so it's no big deal. They generally, I'm not saying none, but there's generally don't go to the hospital. They don't, it's so, like, I personally have had the vaccine and I don't worry about it at all anymore. But yet the thing that scares the markets is in some liberal states, they're trying to make a big deal of it again. Oh, let's, put masks on again. Let's shut down again. Let's shut our schools, make our kids wear masks. They're overdoing it. But, that's, both parties make their mistakes, but the Liberal Party tends to overplay their hands, and they're overplaying it big time on this and several other issues. So that's the first thing that scared the market. The second thing is interest rates. All of a sudden, everybody's afraid of rising interest rates. And that's because when you do year-over-year comparisons between the interest rates, between the inflation rates, of course, during the pandemic, prices went down on a lot of items, but now the demand is coming back. There is a push, and obviously the government in the U.S. keeping some employees out of the market, till September, which was crazy, is causing some inflation there. There's a chip shortage, so cars are expensive, housing is going up because interest rates are going down, in the long run. So my theories, and the third theory I have is that the market's very high right now, and there are a few sectors I like. And we could discuss this in detail because I'm always looking for other ideas. But right now, I think energy, the only opportunities at all that I would even move to, except for a few little deep, tiny ones I have, is basically energy pipelines is a huge opportunity. Technology, which I play through mainly the big ones and puts, and consumer staples. I still like those because I think interest rates are heading to zero in the next 8 years or less. And maybe healthcare or some other sectors, we could discuss that. But overall, I think the market overreacted, and but partly because it's so high. What do you think?
Actually, last 2 days of trading, yesterday and today, actually validate your point of view that it was overreaction on Monday. However, it was down on Friday as well, and maybe even Thursday.
Yeah.
But I think it's probably overdone, and the last 2 days is a great confirmation of that. However, about the interest rates, Peter, what's your position on? Obviously, there is inflation. Nobody can deny it. You look at the gas prices, look at the food prices, the transportation, everything else. Everything is way much higher. So, how you mitigate that? Let's see if it will keep going even higher. Then, what you're gonna do? Keep interest low. Inflation is higher, and prices are getting higher. How is it going to play at the end of the day?
Well, my since I've been on the show, it's really helped me consolidate some of my ideas of where we're going in the future. I really have to say, I mean, I've gotten so much benefit plus some of your ideas and other ideas I've gotten on the show. But so first of all, I am almost positive, not positive, that interest rates are going down towards zero. Why? One, because the U.S. and world debt is phenomenally large. The U.S. debt alone is more than all assets, real estate that's privately held, stocks and bonds, or rent that's off the books. The debt off the books, it's huge, and the U.S. has never paid down any debt. At best, they say, "Oh, look, we're level," but that doesn't even count the unfunded liabilities in all these countries around the world. And I've looked at other countries, China, India, I've looked at Europe, I've looked at South America. They're all in the same situation where not only do they have unfunded pensions like Social Security in the US, but also they have unfunded Medicare medical liabilities that are gigantic. Look, if you're giving free health care to people at age 65 and 70 and 75 and 80, those costs go through the roof. It's unbelievable, the cost. I mean, I could tell you now, a 64-year-old in the US with a 7,000 deductible might cost $1,200 or $1,300 a month. And it goes up from there. And the U.S. is and the world is saying, "Oh, we'll cover your healthcare expenses," but this is going to suck. And then none of them are funding it. They're all saying, "Oh, we'll worry about it later. Worry about it later." But they're going to have to. So bottom line of this first point is they're going to have to issue so much debt because they can't print that much money, and then they're going to want interest rates to be zero. The second point is the actual interest rates have been going down for 40 years almost in a straight line. And if you project that out, 8 more years, we hit 6 years, 8 years, we hit zero. Third of all, demographics. An aging world population is very deflationary. People, as they get older, spend less because inflation eats away at their spending power. They want to save more. They don't want to invest in stocks as much because they want safe investments. They don't want to lose any money. So they want any interest rate. They'll settle for less. And finally, technology is hugely deflationary. It creates more productivity, but it's going to replace jobs. It's already starting to replace jobs around the world. And also, take the office market where I don't think it's going to collapse the banks, but it's the office market is really hurting. I mean, in New York, for instance, they went from 19% in a month 2 months ago to 20%. Now they're 21% vacancy rates. 21% occupancy rates. Dallas is 40, went from 40 to 48. It's like all over the country and all over the world, companies are saying, let's have half our employees work at home. We'll let them all take it. Maybe they'll work remotely and they get a 10% break. Very few companies are going to be able to compete with that because how can you be the one company that says we want everybody in the office when the other people say, no, I want to work at home, and the other company will give me just as much money and I can work at home and not commute an hour or two. So the office market is just an example of technology. And so when you take all these factors, it's all deflationary. And so in the end, I believe it's very important to lock in income for the future because, in 7 years or 10 years, some of my bond portfolios are going to expire. And it's like, I may not even, I got 2% last time. Maybe I'll get 0.5% this time or less on even long-term bonds.
Uh, you know, it defeats a traditional way of investing, where the normal model would consider allocation of capital, say 50% in bonds, 50% in stock. Sometimes, if you're bullish, then you allocate 60% to stocks, 40% to bonds. But I
Right.
think that is no longer a perfect model, because if your bond portfolio would get you, say, 1 2%,
I know.
and high paying dividend stocks are getting you 7 8%, then how could you allocate 50-50 to get 2% on one side and 8% on the other side, when you can allocate maybe 20-80? 20% you're getting 2%, even that
Well, but there's
is
also
not
the
just.
safety factor. I mean, this is why, and this is why I keep about 4 or 5% in silver and gold, because just in case the government loses control, then it's going to go crazy. But that's just a hedge. But I keep about 50% in bonds, because you know what? Who knows what's going to happen in the future world? And the thing is, it's safety of principle as you're getting older, and you want to protect, and also from the volatility, because if you put 100% in stocks and it starts crashing, then you're more likely to say, I can't take the pressure. I'm losing too much money. So you have to anchor everything with bonds. But you know what? The way I view it is, when I hit 75, if I could take that 50%, the bonds, or a percentage of that. I could always annuitize it for life income. I could do I can do it, and then I'll get a nice flow of cash. It won't matter what the interest rates are, even if there's zero. Right now, on an annuity, you get, maybe at age 75, you might get 10%, but very little of that is interest, because the insurance companies aren't paying a lot. It's mostly basically it's like reverse insurance, where basically you're saying, I think I'm going to live a long time, or I'm worried that I'll live a long time, so I want to get a cash flow. And some people, might buy an annuity, and unfortunately, they might pass on in 6 months or a year. And the other people might live 20 or 30 years. So it's the insurance companies actuarially figure it out. It's like reverse life insurance, because in life insurance, you're protecting against death, but here you're protecting life. So it's important, I think, to anchor with the bonds. Plus, the bonds have a very good margin, by the way, and that's the other thing. That way, if you want to sell some options, you get, like on a muni bond, you get 90% margin power. So it keeps your margin power high. Stocks aren't quite as high. And you know what? I'll bring up one last point just about the interest rate I wanted to say. So, everybody's feared of interest rates in the market, but right now, on today, on a 5-year bond, you can get 0.69% on a treasury, which is considered totally safe money. A 10-year, 1.13% on 10-year investment. And if you want to go 30 years with something that's guaranteed to pay you back in dollars, no less, which who knows where that'll be, 1.88%. So the bond market disagrees with the stock market, and the bond market turned first. And now, because this bond market is saying we're not afraid of interest rates at all, and a lot of times the bond market is right compared to the stock
Yes,
market.
agreed. Well, that, I guess, brings us to a second portion of our program, second
Okay.
segment. And okay, we would like to have a little commercial break here.
Very good.
Hi, I'm Sveta Banerjee, the founder of Chamomile. Welcome to the #1 impact community platform of entrepreneurs, impact investors, experts, and people who are driven by achieving sustainable development goals and, of course, positive social and environmental impact in our world. Among our members, we have already world leaders such as Prince Michael of Liechtenstein, former Minister of Netherlands, head of European Investment Bank, and many others. What can you do on the platform? Of course, you can fundraise if you have project or a company. You can find various kind of resources, including advisory board members and team members. You can, of course, invest with impact and learn about impact investing. So look, the world is changing, and it's not anymore a moral choice, but it is a smart choice to join impact investing community. I'm looking forward to see you at Chamomile.
Bravo, Svetlana. Good presentation. So now our second segment is we're going to talk about gold, Bitcoin, and other cryptocurrencies. Um, there are a lot of developments in that markets as well. So gold finally have a positive day today. It was in a little bit of a slump in the last few days, but I think it's doing fine today. What's your observations, Peter?
Well, I don't really track gold very much at all. I look at it once in a while, but basically own 3% in gold, and I sold some put options that makes it really 5% ultimately on silver and gold, another 1% each.
Mhm.
What I do is I sell long put options, and then I sometimes cover them at a lower rate. But I mean, look, I like gold just as a hedge. But I'm not confident at all. I personally think it'll stay flat, or maybe who knows what it'll do. But it may do well because it's a relative value trade. So that means that it's relative to interest rates. So if interest rates really go down to, I guess this is the way I view it too. If interest rates explode, first of all, gold could do very well because of fear, and or if the dollar gets very weak, which I don't think it will ultimately, then gold could explode. But even if if things are slow and interest rates go to zero, well, if inflation is higher, and I think it will be higher than zero, which will be very tough for a lot of people, but especially because I think there's going to be inflation in certain areas like energy and in housing, because if low interest rates are low, housing goes up, and food will always go up a bit, and so there's going to be some inflation. So if inflation is higher than interest rates, if the interest rates stay low or even go lower, then gold holds its value, so it can actually make money even in a very low interest rate environment. So I like gold, but I don't follow it daily.
Mhm.
I mean, I just hold it. It's insurance, basically.
On the other hand, Bitcoin looks very interesting. Actually, it was yesterday lower than $30,000, and so market was up yesterday quite significantly on a rebound from Monday's losses, but Bitcoin went down a bit. I'm still trying to find some correlation between Bitcoin's prices and either
Mhm.
price of stocks or gold or just anything to have some kind of a reference point. But I fail. I just can't find that.
Well, as I said, Bitcoin can go anywhere. There's no fundamentals. There's no moat for it. But I have a guessing game for you, Sasha. I was hoping we'd have another guest or two to
Oh
play
yeah.
this game. But I've discovered something very interesting about cryptos. So, and I don't think anybody would get this right, but I could be wrong. So, guess how many actively traded cryptocurrencies there are right now?
Probably well over 20.
20, you said?
Yeah.
Okay. And for reference and audience, you take a guess too. How many actively traded cryptocurrencies are there? But also, I could tell you, all right, so, and in 2017, how many do you think there were?
Yeah, well, at that time actually, there were probably 20 at that time already.
Okay. And in 2019, about 20.
Probably over 20, yeah.
Okay. So, and very few people would know this, but so you ready for this? In 2017, there was somewhat less than 2,000 cryptocurrencies being traded. In 2019, it basically doubled, and it was somewhere less than 3,500. And by the way, this is just an estimate because there's different sites, because there's so many they disagree. But these are reliable sites I'm looking at, and they're throwing these numbers out, give or take 1,000. So right now, I looked up how many actively traded. I just Googled it, and you get different answers. But basically, the answers come in with an average of 7,000 actively traded cryptocurrencies right now. Everybody thinks, oh, Bitcoin and Ethereum and Dogecoin, because that's the one they hear about. But this is an example of having no moat. So there's 7,000 people who can create these currencies. And I'm not even sure that includes the new thing, stable coins. Ooh, so I mean, this thing, does that mean since it doubled from 2017 to 2019, doubled again from 2019 to 2021? Are there going to be 14,000 in 2023? Why not? Because I'd like to create one, and everybody should create money, But this is why the governments are going to crimp down on it very likely. In July, it's coming out very soon. I would expect the Fed has said that they would issue a report on it. Maybe they're delayed, maybe they're not, but they're very negative. Of course they're negative, and the governments of the world are mostly negative on it. China's already banned it, and Bitcoin particularly, where they do 75% of the mining, and China's saying we don't want to allow any mining because Bitcoin alone uses 0.6% of the energy of the world. Just that one.
But I think a very important question is how government can make any money from Bitcoin and other currencies. How does it work for government?
Well, it's not that they need to make money from that because they can print all the money they want. Of course, it can cause inflation, but I would say, look, China has their digital yuan already, the digital currency, and the U.S. is working on it, and other countries are working on it. So at some point, they're going to come out with this because they want to be the ones to control and create money. Obviously, so they're not going to want this other thing and so it's all developing in the market, but it's crazy to me that they've allowed it to go this long because people have made and lost fortunes on this, but a lot of people have made money just by saying, okay, I'll create a currency basically. But I don't think it's going to last, although it could go anywhere because there's no fundamentals at all. But tulips in Holland hundreds of years ago went to $200 a tulip, and then it crashed down to zero. And that's probably what's going to happen. I wouldn't put a penny in Bitcoin or any crypto because, again, I'll stay with things that I know have some value, and these things are airy-fairy to me, but who knows?
So here's the way, it's kind of, if it's not attached to any recognized value, it's not tied up with either stocks, of course, not bonds, not gold or any other precious metals, and it's kind of a value, or actually absence of value, in a way. So
absence of fundamental value, right?
Yeah. So basically, the price is an agreement between a buyer and seller. So let's say they agree yesterday it was like 29,700 or so. So
right.
Today is 32,000, and a few months ago it was 65,000. So basically, there is any number can be justified, whether it's 30,000, 40,000, 50, 60, 70,000, 100,000. So it's all just agreement. So if yesterday I'll tell you, Peter, please sell me your Bitcoin for $75,000.
Exactly.
So, Sasha, I'll do that for you. So here's a price, $75,000.
Yeah, well, here's my pen. I could sell that for 100,000, right? There's a new market. Buy green pens, 100,000 each. And people can trade it, but there's nothing real. But by the way, you raised something. The new thing is stable coins, and stable coins do have value. But this is the same issue with the governments. They're cracking down on those even faster, I think, because they're saying, okay, here's a stable coin. And I'm just making up numbers, and this is worth $100. So you can pay me $100, and then you can trade it in later for $100. So it's stable value. Maybe they'll do it with gold, maybe they'll do it whatever. But the SEC and the federal government is looking at it and going, and they should, and they're going, wait a minute, who's this issuer? What if Mr. A says, here's $100 green pens, and I sell 1 million of them, and then they say, don't worry, I'll give you back your $100 when you're ready. Oops, I retired, or I'm in the Cayman Islands, or whatever.
I changed my mind. How about that?
Yeah, well, yes. And you know what? One of the stable coins, I believe, changed the contract. They actually changed the terms. One of the bigger ones. A few years ago, they said they'd give one thing, and then now they're saying another thing. Yeah, they changed the contract. They're not there. They went bankrupt. The guy who did it isn't even alive. He went to the Cayman Islands with his millions of dollars. So I personally think I'd just as soon buy green pens for $100 because at least this is worth $8, and I know it's worth $8. And I paid $12 for it because I don't even know if they make them anymore. They're Dr. Grips. I love these large pens. But am I going to pay $100 for a stable coin, or $32,000 or $29,000 for a Bitcoin? You know what? There's much safer investments out there. and so why take a chance?
So basically, if you're paying $100 for that pen, intrinsic value is say $12, right? And
Let's say,
$88 is goodwill, which could be amortized over the years. So it's
right.
not, it's not such a bad deal, though.
So you're saying I can depreciate my $100 pen? Yeah, I don't think it works out.
Yeah,
But
I'm not sure.
what? But here's the. Yeah, I'd like to take a little time because I know we'll be tight. We might be tight on, when we still have to cover options and dividends. But you know what? Here's my struggle. And I'm the dividend picks I'm going to talk about. I really went for energy this month. I have, I want to talk about this too. I wrote up 10 different reasons why I like the energy pipelines, but I'm going to raise this right now, which is one of those 10 reasons is I just don't like a lot of other sectors. Right now, I keep looking at where can I park some cash because I have, I don't know, 10% of my portfolio in cash now. I have money sitting at American Express earning 0.4% taxable. And, every time I think, oh, I found some place to invest a little more in stocks, then it's like, oh no, this company's no good. This week, I sold MPW. I want to disclose this too. 1% I had in MPW because it's a hospital REIT, and I thought it was very safe. It's done well. It paid 5% dividend, but all of a sudden, their tenants I'm seeing are worse and worse. And what's happened is they're doing complex transactions to support the tenants, and I'm thinking this may not work very well in the long run. So now that puts me out of healthcare, basically 100%. Then utilities, I have one or two utilities, but IDA is IDACorp. That's my favorite by far. I just went from 2% to 1%. I love IDACorp because it's got a 3% roughly dividend, a little less now because it's been appreciating. But Idaho's the fastest growing state in the country. It's booming. Companies are moving there. It's very well supported. It's a conservative state, so they'll get their rate increases. But all of a sudden, it's like, well, wait, what about wildfires out west? They can really hurt a utility. So I said, okay, today I went 2% to 1%. I took profits, but it's like, okay, there's some more cash. Now, what do I do with that? The third thing is I sold Morgan Stanley, 0.25% I only had. I had much more, but I've been selling it off as it keeps going up. And boom, it's great. But now it's so high, it's paying a 1.5% dividend maybe or so. Or maybe they just increased it to 3. But the thing is, it's so volatile historically.
Yeah.
And, but then I look at the sectors. I say, wait a minute. So utilities, this is an interesting chart of allocations of cash, and it shows that utilities right now are spending 127% of their cash flows on capex. So what basically they're doing is they're converting from coal to coal, and there's also the danger of grid diversification, which is basically people saying, well, I'm going to get solar from my house, and solar is improving so much if you look at McKinsey studies. So you say, well, nobody knows where the utilities industry is going to be in 10 years because people may be powering their homes a lot in 10 years and 15 years. So if you're getting 3% dividend, when do you get your money back? And then it maybe gets very shaky, especially in more liberal states. They're going to say, no, we don't give you rate increases. We're not going to worry about you. You can cut your dividend. So then, the only one I look at is, besides energy technology and consumer staples, is healthcare. And I'm always, and you can tell me what you think about this, because this is, but healthcare, let me ask you the question though. My concern with healthcare is just, they're curing more and more things. So I wonder, let's say I'm getting a 4 or 5% dividend or 3% on a healthcare stock. Well, that's great. But if they're really going to cure things, they're working on the, genome, they're developing healthcare. All of a sudden, they start curing more and more cancers, more heart issues. We have an aging population, but it's great that they're doing this. But and not to mention government pressure on these companies, which could keep accelerating. It's already getting worse and worse. But so, am I going to get my money back out of that one? I don't know. What do you think about healthcare?
I think about healthcare. I'm not a specialist in healthcare stocks. of course, but I have two of those that, in my opinion, are standouts. It's obviously Pfizer. And Pfizer is, first of all, out of three vaccines approved in Canada and United States, although two of them are the same, Pfizer and Moderna, and the third one in Canada was AstraZeneca, and in US, Johnson. Now, after AstraZeneca is no longer available in Canada because it has some side effects, and public opinion is quite low on that. So right now, for several reasons, and some of them are just being discovered in the last couple of weeks, Pfizer is definitely the vaccine of choice compared to Moderna. And even Johnson & Johnson never really took off. I mean, it's approved, but I'm not aware if it's doing that well. Now, on the other hand, Pfizer is already looking into boosters and some other variants of vaccines, and they're getting government orders right into 2023. So, although maybe it's not significant part of their earnings, but it's still, we are talking about billions of dollars in any case, any way you look at it. Plus, there will be, in my opinion, overseas orders as well, sooner or later, if not already. So, in my opinion, Pfizer it's paying now, I think, about 4% dividend. It's not that it was paying much more when I got involved, but now it's just down to 4 or even below 4. But I think it's unquestionably one of two stocks. Another one is ABBV. AbbVie. Yeah, it's a little bit more expensive. It's about $116 a share now. But I think it still pays about 5.5% dividends. And they have some premier drugs. I think Humira is one of them. And but I used to own ABBV, and again, I was exercised on options, and I had covered calls, and stock was taken away from me, and I'm thinking about getting back to it. It's doing quite well, and of course, I think Pfizer is number one. ABBV is very close, second choice. Okay, I think we'll take now a small break, commercial, and we'll continue, and we'll talk about energy.
Okay.
And Guidry goes, let's go look at something that took place 40 years ago. Who cares? Okay, that's political.
Good show. I like to watch it, and they have very capable professionals. And it depends on the topic. It's very interesting. So now our third segment of the program, we are going to talk about energy this time. Because Peter is very anxious to share with us his thoughts on that. So please, Peter, tell us what you think about energy.
Okay, so I made a list of 10 reasons why. To me, it's the only place really where there's exceptional value left is energy pipelines. I like consumer staples. I love Amazon, which I sell puts on. I like Microsoft. I sell long-term puts on 2023. NVIDIA. Oh, we should mention NVIDIA, though, if we don't do an option segment, by the way, which is just it's split now. And, the market is saying, oh, they got very nervous about NVIDIA this week. They're saying, oh, the cryptocurrencies, which we were talking about, are part of their business, so they're going to lose that. But to me, it's like, wait a minute. NVIDIA already said that they're not even going to support cryptocurrency chips now because they want to. They're so short on video game chips, they don't want to make any more crypto. So, for the time being. So that just tells you they don't need crypto at all, and they already sold the cryptocurrency chips they already had. So it's not part of the main thing. So NVIDIA is so undervalued, but I'm still holding the equivalent of 800, but since it's split four for one now, 200. So to get to the energy, so first of all, the market thinks, oh, I don't want to hold energy because, solar is coming, wind is coming, and there is a certain truth to that. I mean, obviously the world is trying to reduce carbon, but first of all, even as they're reducing carbon, the energy. So one of the reasons is as they're reducing carbon, the energy needs of the world are increasing every year. So the pie might be split up more, where you have some solar now, some wind, but you have two things, which are two of the reasons why. One, the world's population is 7.9 billion now, and by 2037, it's going to 9 billion. Every of those people needs energy. Also, another reason is because the emerging markets are getting wealthier. The world is, redistributing some wealth. And these people, some of them don't use any energy. And as the emerging markets grow and other undeveloped countries, including even in India and China, there's so many people who don't use that much energy, then that's more energy. So this is all going to absorb energy. And so maybe solar will help, defray the need for a certain amount of oil or gas. But then you get to the specifics. The International Energy Agency estimates that in 2040, world oil demand, 20 years from now, will be 7% higher. So, and by the way, another reason is because of coal. That's the first one to go. It's a major supplier of world power. And it also pollutes the heck out of China, particularly. You can't breathe in Beijing. People wear masks. And India and other countries, so they want to get rid of the coal. So before you can even think about getting rid of natural gas, which is the cleanest, and oil to an extent, you have to get rid of the coal. And they're even attacking nuclear power. So that's another reason. Did you have a comment?
I just wanted to ask your opinion about nuclear power, because that's supposedly the cleanest and I wouldn't go as far as to say the safest way of energy. But considering how many nuclear power stations there are around in the world and how many accidents happen, it's not too many.
Yeah, it doesn't take many, though, does it? I mean, you have the Japanese accident. Some countries are expanding the nuclear. I believe Russia is. Germany's uses a lot of power. But then you have an accident, now and then. Oops, Pennsylvania. Oops, Japan. It would only take one accident to decimate, a good part of a country or a whole country. So a lot of countries are saying we don't want nuclear. Plus, a lot of people are against it. Even environmentalists, for some strange reason. Well, I understand why, but they're like, we don't want nuclear energy. So it's not like nuclear is going to replace all that coal, not to mention the natural gas. And solar isn't going to replace it because it's erratic, and it costs a lot of energy to build a windmill, by the way, and a lot of pollution. So it's not so easy, to do that. So going on with the 10 list, the U.S. Energy Administration estimates U.S. natural gas production, and I love natural gas more than oil, is going to be 7% higher. It's going to be about 29% higher in 2050. So natural gas is growing forever, for in 30 years. Oil seems to be growing, but the market's acting like, these companies are going bankrupt. Now, I don't like the traditional companies. I wouldn't put in money into Exxon or whatever, although it may do well. But, this is why the MLPs are an incredible value. Another reason is because they have such high dividends and cash flows. You're looking at, and we'll get into my specific picks when we get into the dividends section, and where I expanded to, but you're looking at, let's say 6.5% to, over 10% dividends, and they're all supported by cash flows. And these companies have now moved to self-funding models. So in the past, they went to the markets whenever they needed money, but they all said, wait a minute, we're not going to do that anymore because the markets are so erratic and the markets don't like it. So now a lot of them are saying, we have enough money from our pipelines that are already in existence to fund our future growth. So they're not only covering their cash flows, their dividends, their high dividends, but also they have these projects, and every time one comes online, more cash flow.
of course, they avoid dilution of all existing shareholders as well.
If if they come to market with more shares that dilutes it, that's why they don't like to do it. But I'm saying now they're mostly self-funded. Another reason is because they have very long-term contracts. People need energy, and because FERC, which is the agency that regulates it, because these are basically utilities, and the market should price them like utilities. A utility, you get 3% dividend. Here, you're getting huge dividends, but the market doesn't view it as a utility. But FERC recommends, what rates they can charge. So I looked at a chart, and every year, whatever the inflation rate is up or down, the FERC gives them a little extra, or an extra percent or two. So they get even more cash flow, and reasonably, because they should make some extra money, and they're using it to, develop natural gas line, particularly that is very pro-energy environment. So that's another reason why, of the 10 reasons. Let me just go through that. So we have the population, all the forecasts. You can't get. Another reason was basically what I talked before. I can't find any other sectors where you can get reasonable returns besides staples, that I feel safe about. I'd love somebody say, oh, here's a sector, where it's really guaranteed or it's fairly guaranteed they're going to be in business in 30 years, but it's a changing world. So, and I started to mention China and India's pollution, and they're going to desperately need it, natural gas and oil compared to coal. But here's an interesting fact. China has promised carbon neutrality in 2060, and they are in the process of, you ready for this? Right now, they're in the process of building 455 new coal plants. So what does that tell you about the energy of the world? They wouldn't be doing that if they thought they could get enough oil and gas, and that's why there's geopolitical battles in Africa and everything, and why they're trying to get influence there. They know where the oil is coming from in the future, their oil. So, more or less, I named the 10. It's basically, to me, the no-brainer. And I have to look at the percentages, and I'll talk about the specific picks. But basically, I upped in varying degrees all 4 of my major picks, all 5 of my picks in energy. Because you know what? I like cash, I like consumer staples, I like technology, but I do it through puts. So energy is the place to be if I want to generate income.
Okay, so this energy, you would buy your favorite stocks and you would sell covered calls against that position, right?
No, not in energy.
No?
No. On technology, like NVIDIA, Amazon, I like to sell very long 2023 puts, because then I feel like I build a pad in. Because if you get a big premium, so you can actually buy the stock less in case it goes down 10 or 20%. But no, I'm the Warren Buffett philosophy. Not that I'm Warren Buffett, believe me, but I want to hold these things for life. Because look, if I'm getting the lowest one I'm interested in is 6% dividend, but that one's been doubling, and I'll talk about that. But basically, if I'm getting 6% to 10% plus dividends, why would I hold? And I think I'm going to have it for 20 or 30 years. This is my retirement money, basically. So I have a lot of extra retirement money.
Absolutely.
And not to mention that a lot of these companies probably grow their dividends, plus I can reinvest the dividends. And so, there's nothing to me in the market like this. Now, there's tax implications, which also scare the market, so some people don't like it. MLPs, you have your K1s, which is actually a huge advantage. But if you own a lot of them, it's complicated because it's complicated accounting. So you have to pay your accountant more or do it yourself. My daughter-in-law did it herself using a software. But, so that's one reason, like the big companies don't maybe get involved with MLPs. Then TRP, one of the ones I'll talk about, is a Canadian. So you have to pay 15% tax if you buy it outside an IRA. So I buy it inside my Roth IRA or IRA. And so there's some tax implications. AM's just a corporation, but that's a small one for me. But mostly 3 out of the 5 are MLPs. And with MLPs, the thing is, until you get your return of capital, plus it's adjusted for depreciation, so you don't even get your return of capital for many years. Basically, you might get like tax-free returns of 10% or whatever it is for 12, 15 years. I mean, the MLPs I bought keep generating losses. So I don't know when I'll ever pay tax on it. So you get your money back in 8 years or whatever. And now, if these businesses go 20 or 30 years and they keep growing or even stay the same, then that's a huge win compared to anything else. There's nothing in the market like that.
Excellent. We are going to take a short commercial break and we'll move into next segment, the last one of our
Very good.
Welcome. Today we're going to look at a unique tax planning opportunity using life insurance to create huge tax deductions for 2020. So listen up to this not well-known plan called 412E3. Today I have a very special guest, Max Culiet, who's a certified financial planner and a registered investment advisor to help us with understanding 412E3 plans. Max, welcome to the show. What is a 412E3 plan?
Well, thanks, Nick. Simply put, a 412E3 plan is a pension plan that has to be funded solely with qualifying insurance, life insurance, and annuity contracts. The contributions to the plan are fully deductible from federal income tax, state income tax, so most of the time Social Security tax and Obamacare taxes as well.
Well, Max, I have a client right now. He's facing a $100,000 tax bill, $100,000 in 2020. Is there anything that you can do for him today?
Sure, Nick. The Secure Act that was passed a while back allows us to set up a plan in 2021 to deal with the tax year 2020. And in many cases, you can deduct 100,000, 200,000, 300,000, perhaps even more based on an actual calculation.
Max, I hear you right. You said you can deduct $100,000. I thought you were limited to $19,500 in 2020. How did you get to a $100,000 deduction?
It's pretty simple, Nick. The $19,500 is a 401k limitation. Every plan has its rules. Profit sharing plans have a limitation of $57,000, but a pension plan is actuarially determined, and it can be well over $300,000 depending upon the math and the circumstances.
Well, Max, I want to learn more about this plan. How can I find out if this works for my clients?
Well, the best way is to give us a call. My number is 877-252-1692, or send me an email. We can certainly set up a go-to meeting, and then we can talk about your client, the specifics, the needs, etc., and design a plan that fits their needs and their budget.
Okay, very interesting information. However, let's move on to our next segment. So we are talking about now, we'll talk both about options and high-paying dividend stocks, because we sort of mentioned that, but we didn't really concentrate our attention on it. So let's talk about maybe first high-paying dividend stocks. And we already basically described. I've personally did very little to change my positions in that respect. I still have the same Altria Group and British American Tobacco, Pfizer, and I have Enbridge, Canadian gas company, and still have a little bit of WBA. Walgreens, although it's one of mostly hated stocks, but I still have it. I can't figure out, because the dividends are still keep coming, and I'm kind of reluctant to move out of it, but I will shortly, I'm pretty sure, because I don't know, my level of happiness goes down when I look at WBA. And finally, what else? I have Gabelli Income and Dividends Fund, which is doing quite well. And also I love monthly dividends from Gabelli dividends, and they're paying like a clock every month, and I think it's 10th of each month, and this is going to be the last one that I will sell, because when I'm thinking, okay, I'm not going to sell and I will miss next month's dividends. I mean, why would I do that? No, okay, I will hold on to it a little bit longer. Then I think about again, okay, well, market is overpriced, so I have to probably free some cash, but not this one because I want my monthly payment. So, what about you, Peter? How you mitigate that?
Well, energy went down with the market for some strange reason. OPEC actually agreed to control prices, and it was good for oil, but somehow the market went down. It's just part of the panic. But again, I'm looking 20, 30 years down the road. I don't look at things. So I upped my energy because I just can't find another place to put things that I feel good about, at this point. So I brought MPLX, first of all, up to 11% of my portfolio, which is a
It's
big bet.
number one, by
Yeah,
all means.
yeah. It's got a 10% dividend. It's easily covering the dividend. It has all kinds of growth projects. It's more natural gassy than many of the MLPs, not all of them, but I don't like the pure oil MLPs because I'm not quite as confident of that. I know natural gas is growing. I'm not sure about oil. So I went actually to 11% on that, on the dip, and now it's come back a little bit. Second, TRP, the Canadian TC Energy, I went up to 6.5% of my portfolio. It's 25%, supplies 25% of the natural gas to the U.S., Canada, and Mexico. So it's a huge company. But the thing is, it doubled its dividend from 2000 to 2010. It doubled it again from 2010 to 2020. It's already promised to do, I think it was 8 to 10% increase this year, even though it's paying 6.5 already. No, it's paying 6 already, and then after that, it should be growing at 5 to 7% a year, basically more or less double every 10 years. Because and plus they're doing other projects now, like carbon sequestration with Pembina pipelines is a whole new business they could get into. So I love it because it's safe, and I have it in an IRA, so I don't pay any tax on it. And you can avoid the Canadian tax by doing that too. So I upped it to 6.5%, which was a bold bet. I went bold on energy, but I look at, I don't think it's going down a lot anyway. And plus, a new dividends coming up. So I love that company, TRP. I went surprisingly, I wasn't expecting this, but EPD is another pipeline, and I only had 0.5%. But I kept reading articles that were favorable. It has a 7.5% dividend. But what I read all of a sudden hit me like a ton of bricks. Half their profit margins, their profits, come from natural gas liquid exports. And I didn't realize that. So I don't necessarily like the price of natural gas liquids in the US, but they've already got half their business, and they're easily supporting the dividend. It's considered one of the safer MLPs. So this is a huge growth business because the world needs energy. Any energy they can get, they'll take it. China, Europe, everybody. I mean, that's why Europe cut a deal with Russia recently, because they need natural gas. So I went up to 3% there, and on the dip, and it's still down a bit. Again, I'm hoping that I'll hold it in 20 and 30 years, just collecting 3%, and I probably won't pay tax on it for 10 or 20 years too. Although there's a proposal to change the tax laws a bit in 2026, but they should still be tax-free for at least many years after that, because these companies control their depreciation, and then they save it for after the tax law changes, if it even goes through. And then another one is USAC. I'm always cautious about this because they're paying a very nice dividend. I forgot what it is now, 13%, 12%, but they're barely covering it in terms of cash flow. So, but what I like about them is they make the motors that push the gas. So as long as we need natural gas in the United States, they're going to need those motors to push the natural gas. So it's a very safe business. There's been talk, some articles think that they might cut their dividend because they're getting up to loan covenants and stuff. But the way I viewed it is, I realized, look, if they cut their dividend from 13 even to 6 or 7, if their cash flow is covering 13, which it is, it's like 7x. I always look at price over cash flow. Then I'd still take 7, and it may never cut it. So I'll watch it. I'm a little nervous about USAC. And then finally, AM, I upped it a little bit to 2/3%. It's paying a 9% dividend. It's a corporation, but I throw that in the IRA, so I don't pay tax on that now. A little cautious about it because the parent has historically had some problems, so you never know what happens. But it's from Appalachia, which has the cheapest natural gas in the country. So it's
Wonderful.
so they're probably going to be fine paying that 9%. They actually cut the dividend to 9%, and that is because they're self-funding. So they stop needing to go to the market, which is the new model. It's like just use all these cash flows to, do all your growth projects. So all these companies basically are easily or covering their cash flows, huge dividends. Many have tax advantages. So I don't know what percentage this is altogether, but it's basically 6, 6, and 11, and 3. So it's maybe 21, 22%. And I don't think it's going down a lot.
Well, if you like the sector, it's a very, very healthy allocation.
Yeah.
And now, while we still have a little bit of time left, let's discuss about options, which we both use and love a lot. And of course, now it's about time to say a few words about NVIDIA, which is which is a darling of both of us. And so far, I can't see how NVIDIA can disappoint anybody because, it can disappoint only its competitors, I guess. But
Right. Oh, yeah, there's such a huge demand for chips, and they'll need them in EVs. They need them when Oculus comes out. People are probably going to have maybe rooms ultimately, which will be reality rooms. That's what I think is going to come. Right now the Oculus type thing will get more and more popular, where it's just sets. But eventually, why can't you have a room where maybe you have all your walls, and you create, it's total reality immersion. But any of this stuff, the new cars, the Oculus, everything that's coming, the future is all chip related, and NVIDIA is definitely one of the best, or if not the best, in video chips, without a doubt. So, and plus I'd throw in that the government is trying to encourage U.S. production of chips because we're so dependent on China and Taiwan. And if China takes over Taiwan, which would be a big, that'd be a war for sure. Taiwan has military power, but there's more and more aggression coming about Taiwan between China and Japan, China and Taiwan. So I'm just saying the threat is there. What if they took Taiwan? Then we'd lose a lot more of our chips. So the U.S. is proposing, or it's in the works, any budgets, they're going to say, okay, let's give money to encourage chips, whether it's tax deductions or credits or whatever. We want to have our chip production back home, which is the smartest thing probably we could do.
But Peter, sure that Taiwan Semiconductor is preparing to move their production facilities to the United States.
Say that again? I didn't.
Taiwan Semiconductor Company.
Taiwan.
Preparing to, it's major in the world. They're preparing to move all their production of chips to United States.
Yeah, I could see why. Because they're from China, and also because the U.S. is probably going to give a lot of money to them to move. So
absolutely,
the U.S. has enough money, and the U.S. is going, wait, we're behind on the chips, and there's certain areas where China's been very strategic. Minerals and chips, and the U.S. is strongly certain medical supplies. The U.S. is waking up partly because of COVID, which will backfire on the Chinese. But they discovered we're dependent on them for things like masks. It's like, wait a minute, maybe they're not the most friendly country. I don't know why. I do know why, but they're basically they're too controlling of their people. But when you have so many billions of people, I understand that to a point too. But you have to, it's a lot of people to manage and feed and everything. But the U.S. is getting nervous about it, so they're going to give money to the chip makers to move.
Absolutely. Actually, I've heard that there is a shortage of chips and some car production companies. They cannot make any car productions until the end of this year, and the shortage of chips will run into 2022. So now there is a recommendation to redesign their cars using more available chips that are on the market, because they're all trying to use high-end chips, and if they're not available, so they will not be able to produce cars. So there's the used cars that are going much higher in price over time. That's not normal. So but I'm afraid that the quality of those cars will not be the same as with the high-end chips. Now, Peter, since you are a big enthusiast of Amazon, I think you would like my story, because yesterday I asked to comment on this flight of Bezos in a spaceship. Yeah, and I read a little bit about it. Bezos is a strong believer that if people will move into space and start to colonize space, so without restrictions of all kind of supply, minerals, resources, and many others of Earth, and they will be able to live in space, there will be, in very short order, we are talking about maybe 100, 200 years, there will be not billions, there will be trillion of people living in the solar system alone. So what
Maybe
I think is
trillions, no, billions, billions.
so the idea about his flight
Hmm.
to the space is to develop a delivery of Amazon products to all these trillion people in
Oh,
space.
it won't be a
Now,
trillion. It can't be
so
that
he
fast.
will have
Someday, maybe in 1,000 years, it'll
yeah,
be a
but
trillion.
he, well, so at the end of the day, doesn't
Yeah.
matter how much time it will take, but at the end of the day, he will have products and he will have means of delivery. So, so this is China cannot touch what Bezos is doing. So for
Yeah, yeah.
Amazon should be then $1 billion stock.
Well, there
It-
are theories that maybe they could do space mining, eventually, because the world will eventually run out of minerals, but we're not near there yet. But so they say, okay, maybe we can go to a meteorite and mine it, but it's very expensive to get there. It's all theoretical, but you know what? People fault him for it, but I like, this is how the future's developed, and it's his money, and I read an article that's criticized him, oh, you should just give it to the poor, or whatever. But he paid $1.4 billion in taxes himself. And so, that's just, garbage. But I think it's, interesting what they're doing, these
is.
futurists, and they're ahead of their time, but it's going to take a long time for anything to work out financially there. But, they're developing it. And plus they can maybe make money on the space travel, some of these companies, because, people could pay a lot to say, oh, I want to go out in space. I'm willing to pay a fortune, to do it. So
How much would you pay to go to space?
personally, I did I wouldn't pay $1 because I did the Mars ride in Disney,
Oh, yeah.
and oh my gosh, my stomach did not like that ride. It's like you're going in space. I don't know if have you ever done that one, like gone to Disney and done the Mars ride?
No.
Oh, okay. If you ever go to, we're big fans of Disney World. We have a timeshare down there. It's worked out beautifully. And so we go down there every year. But I did the Mars ride. You spin around kind of, and they simulate a Mars landing. It's really a good ride, but it's very hectic. It's crazy. Anyway, so no, I don't want to go to space. And, I have enough reality I can look up at the planets and realize we're in a very tiny universe.
I think you're better off stay here and to see how Nvidia will cross $200 in the next few days.
I wouldn't be
And
surprised
then
it's up today. Yeah.
maybe even today. And then they will go to 250 very quickly, which is $1,000 of before the split.
Right. Yeah, I know. I'm probably gonna look at it and say I should have moved to the eight, from the 800s, which is 200 now. But I'm a little cautious about it still because it's because of the big run up. So, but I'm hoping it doesn't go up too fast because like a lot of these things, then I leave. I'll still make everything I sold, but I won't make. I'll have to rebuy. The puts I will have not made quite as much anyway. But I love Nvidia for the long run, as I love Amazon. I could tell you a story. There was one last story. The Home Depot. So I go to my basement flooded from water because of the hurricane, and so my water heater went first of all. But also then I said, well, our sump pump hasn't been connected because we didn't think there was going to be a problem. So I need a sump pump. I go to Home Depot. No, they don't have it. It'll be August 1st. I go on Amazon. There's tons of sump pumps available. And every week, one of my clients said the same thing. Every week I'm ordering more and more from Amazon because it's like I get it in a day or two. I can find what I want. I like the reviews. There's other sites like it, but I don't think there's anything like it. And the AWS is growing hugely. And that's actually a big business that a lot of people who are not in finance might realize. It's a a huge profit center for them, really big. So they're just their execution is unbelievable. I mean, I go to UPS store now and I drop stuff off, and you just give them the label. You don't have to box it or anything. They're 10 steps ahead of the competitors in every way, and they're going to stay that way probably. So I love it. Yeah, I mean, I sold the 4,500 2023 puts, and it's already gone like halfway, and it may go through there too. But I mean, it's still free money, but it's just an amazing company. But I think we better go because it's past 2:00 now.
Peter, thank you very much for your observations and your knowledge and that you shared with us today. And we are going to close today's program and looking forward to see you next Wednesday, same time. Thank you so much. It's Modern Investing, IBM TV. Thank you very much.
Bye-bye.